Bartiromo is sitting down with Brian Moynihan, the guy who heads Bank of America. And, of course, he has probably a thing or two to say about the Federal Reserve telegraphing today that maybe its next move is a rate cut or two. Let's listen in.
2.5 down to 2.4. But they've followed this travel. 2.6, 2.2, 2.5, 2.4 all across the last 6 months. And that's largely bouncing around some of the topics we went into and the belief of what the trade issues will solve or whatever. And on a worldwide basis, it's low threes. So they believe that the economy is still growing. What we then have, the different insight, is what our customers are doing. And if you think about the U.S. economy as 2/3 consumers, the size of that economy is basically equivalent to China's economy. And so when we think about what's going to happen in the economy, I focus a lot on what consumers are doing. And in Bank of America, so far this year through May, we've had $1 trillion in payments made by consumers, a check written, a credit and debit card payment, cash on the ATM, ACH, wires. That is up 5% plus from last year. 17-18 it was 8.5, and it was like 4 to 5 the year before that. So what you saw is the economy grew faster, it went up to 8, and now it's come back down. But it's very strong, and it's actually picked up during the year a little bit. And so we feel very good about the consumer. And when you talk to our business clients, they're borrowing money, they're making things, they're worried about all the things that we're all worried about in this room, and the ebbs and flows, and what you talk about every morning in terms of trade and whether it resolve and those types of things. They're worried about getting employees. But overall, they're making money, and they're happy, and they're borrowing at the highest rate on the middle market lines of credit that they borrowed at in 10, 15 years. That means they're putting the money to work somehow. They stored a lot of cash, which means they have more money to invest. And I think it's just going to take a little bit of clearance away some of these potential bumps that will then kick them back in.
Yeah, it's interesting that you see an economy that is still strong despite all of the uncertainty around trade and tariffs. So that's really what I wanted to get your take on, because CapEx numbers is something we look at very closely in terms of an indication for the economy. And while CapEx was up about a year ago, I believe the Journal reported it was up 20%. Now it's up about 3%. Are you seeing uncertainty set in corporate America as a result of the uncertainty around trade and tariffs?
So we'd have different numbers, but the same trend, which is that last year you saw about twice the rate of this year, a little higher this year than the numbers you gave. But it is slowing down, again, because there was a rush to get things done. You got to think about late 17, nobody believed tax reform could get done. There had been a plan on the place for the entire administration, and the two administration Obama that was agreed to tax reform, never got through the group of six or gang, whatever they called themselves and everything. And all of a sudden it happened. And so the enthusiasm out of that took off. And so people went and spent the money and did the things. Then, of course, you only need to buy so much. There's a slowdown on the other side of it, and that's what we're feeling. But it's still consistent with a healthy economy, but albeit an economy probably at 2%-ish versus 3%. And that's what's playing out. So we feel, as you look at the businesses and even capital spending and stuff, it is slowing down. It was predicted to slow down. That was what everybody said early 18 about 19 in their second year. It was going to slow down. The question is, will it slow down, or will it slow down and keep going on a line? Yeah. And that's the debate.
And, it's interesting. We are in year 10 of an economic expansion, about to break the record of the longest economic expansion.
By definition, we have to break it now unless they revise backwards. We're in the quarter that would break it. So.
Exactly. And, people are saying, well, maybe it's just the age of this expansion that could turn it around. I don't know. But so far, it sounds like you're not seeing all that much change, even though, yes, things have come in a bit. You're not seeing all that much change from the consumer or business as a result of this uncertainty.
Access to credit is
You're
good.
expecting it, but?
Yeah. Access to credit is good. The people's wages are growing. Unemployment is at levels that are unprecedented, 50, 60 years. So when we think about all the stuff going on in society, when was the last time that new claims for unemployment ran 200,000, raw number? 1968, 1969.
Wow.
When was the last time? Society was in pretty rough shape then. You think about from 1968, 9 through 72, 3, 4. Think about what happened. Nixon, Vietnam was raging, Kent State, Martin Luther King, Bobby Kennedy, the DNC. Think about all that went on, and then ultimately a oil shock and a oil war and then a shock. You think about all that. And yet, here we are on the other side. You know how many people are employed?
And we are going to continue following this. Brian Moynihan talking to our Marita Bartiromo. He is the guy who runs Bank of America, one of the largest financial institutions on the planet. He's talking about this better than 10-year economic recovery. You know, the old market saw that says recoveries don't die of old age. They're murdered. Unexpected developments, black swan moments, the oil crisis to which he was alluding, that undid the 60s momentum that was just evaporated with the 73 oil embargo and OPEC and all of that. But that other things get in the way that we don't see now that could disrupt all of this. What he is talking about, though, is an underlying strong economy without much inflation, which is the trigger of Jerome Powell's remarks earlier today in Chicago when he was looking at the prospect of a trade fight that could turn into an outright trade war and tariffs that he coupled with those on China and now those on Mexico that could slow things down markedly and produce possibly a reversal on the part of the Federal Reserve to not only stop continuing to raise rates, but cut them. And maybe as soon as the end of next month, and maybe another cut after that. So we've seen about 10 rate hikes through this process. This whole process that began with Janet Yellen, his predecessor, Jerome Powell's predecessor, and now the possibility that 2 of those 10 rate hikes will be reversed.